Do you guys ever wonder why you might take a trade like this on a fair value gap and then immediately your stop loss gets taken? Well, today I'm going to be showing you the secret to trading fair value gaps, and it is a lot simpler than you might think. So I'm going to teach you how to, for the most part, avoid price action like this where you enter on a bullish fair value gap and it takes you out immediately, and I'm going to teach you how to choose the correct fair value gaps. This isn't really a secret. I'm just saying that it's very, very simple as just looking at the market structure. So if we look at this trade, if you entered off of this bullish fair value gap, do you see any market structure that's broken on this time frame? No. So if you're entering on this fair value gap, you're literally entering against the trend. The key to trading fair value gaps is not to trade every single gap, it's to trade the gap that is following the trend. So if we zoom out just a little bit, what do we see? We see price broke below these lows. So that means the trend currently is bearish. So should we be looking to buy off of bullish fair value gaps if we're bearish? No. We should only be looking to sell from bearish fair value gaps. As you see, price came to this fair value gap and then price sold off. So that's why you would have got stopped out in this scenario. It is literally that simple. It is that easy, guys. Mark out market structure and trade the fair value gaps that follow the trend that market structure is showing you. So it's as simple as this. I'll do a step-by-step guide for you. So you want to mark out market structure. So this is your BOS or your breaks of structure. Then after you mark out market structure, breaks of structure, you want to, that will help you identify if price is bullish or bearish. Now, bullish or bearish, bullish just means you're going up, bearish means you're going down. And then, once you identify market structure and you find out whether price is bullish or bearish, you want to only, and I'm capitalizing only trade fair value gaps or FVGs that follow the current trend. That is it. If you are constantly taking fair value gaps that just seem to be failing at a super high rate, more than likely you are trading against the trend. Like I said in this example, you would have been trading against the trend if you took this. And then here's another example. Let's say that you bought this bullish fair value gap thinking we would go up. Well, we're still bearish. So if you bought this, you could expect to lose. You know what I mean? Because it's against the trend. Let's look at a few more examples here. So what do we see? We see price breaks below this low right here. And what do we see? What would we sell off of? We want to buy, right? Because we're bearish. We'd sell off of bearish fair value gaps. So what happens? We sell off this bearish fair value gap. And that's literally how, as simple as it is. Now, I mean, this price right here is kind of choppy. It goes into Asian session. But even here, look, we break below this low. And what do we sell off of? A bearish fair value gap. It's really that simple as following the trend. Look, we break all these lows. And what do we sell off of? A bearish fair value gap. We break this low. What do we sell off of? A bearish fair value gap. So when price is trending, you do not want to trade against the trend. So remember this: if you mark out market structure, identify your breaks of structure, and then you identify whether price is bullish or bearish, you only want to trade fair value gaps that follow that current trend. So if it's bearish, you only trade bearish fair value gaps. If it's bullish, you only trade bullish fair value gaps. This is a very simple concept. This will help you choose the right, correct fair value gaps. Obviously not all the time because no strategy is 100%, but this will help increase your win rate and help you choose the correct fair value gaps. I hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I'll see you guys in the next one.